All right, today we're going to be jumping back into the Bitcoin price action because we are starting to see some bullish indications on the chart. We are starting to try to reclaim support of the range. This is something we absolutely need to do if we are going to have a bull case play out. If you guys know, my base case still remains all-time highs, but I'm certainly being more critical of the markets right now, being very cautious with how unemployment data had looked in the last report. That definitely shocked the market, and it was not a false fear. It is a true fear that we do need to worry about because that has historically been extremely accurate in predicting when recessions do start to play out. And what's scary is that Bitcoin has never gone through a true recession. It was created after the great financial crisis. So we are in completely uncharted territory when it does come to Bitcoin. Will it decorrelate from the stock market and act like gold as a risk-off asset? I doubt it, but it's possible. Is it going to act more similar to a risk-on asset in the tech sector and absolutely tank below $30,000? In my opinion, that's probably what's going to happen. But do we have to be concerned of that right now? And that's what we're going to try to answer today. Do we need to be selling? Is the retrace already over? Are we going to fall into the bear market? Or do we have that potential upside? Is my base case of all-time highs actually going to play out here? First, we're going to actually start off outside of the Bitcoin chart, because what we're dealing with is some macroeconomic factors. So why not cover the S&P and the VIX, the Volatility Index? We are seeing historical levels being hit. On this thing, we're seeing some volatile price action out of these lows, which has historically signaled big moves to come. But does this necessarily mean that it is game over right away? Does it mean that we're going to start seeing mass capitulations in the financial world like in the great financial crisis? And while yes, I do believe it's a warning sign that it's coming soon, we do see stuff on the charts that is fractally in 2007 eerily similar. And if it is to play out in the exact same way, if we do live in a simulation, then we actually do have one more upthrust left. We potentially do have that grab of all-time highs before lights do go out. So what am I talking about? Well, we see this big spike up here on the Volatility Index. Historically, when we see these big spikes, it signals bad news for the markets, such as back in 2020, obviously Black Swan event. We also see this thing skyrocket back in 2008 when we have those mass capitulations from institutions, and around when we had the dot-com bubble. We do see some spikes throughout here. It is just a very volatile range with a lot of this, so this is certainly a little bit harder to read, so we're not going to be looking at that today. And of course, history doesn't repeat, it rhymes. So is any of this really going to play out identically like it has in the past? Probably not, but like I said, eerily similar. So what am I talking about? Well, let's go back to 2007. When did we escape this range, this low end range on the volatility index? When did we start spiking up that could have signaled that the market was going to have a downturn? Well, we actually see this the week of July 23rd, 2007, and this volatility index tops out August 13th. So end of July into August, we see the VIX start escaping this low end range. That is the exact time that it is happening this year as well. End of July into the beginning of August, we're seeing the VIX spike here. So you really can't make up the timing of that. And then what we see immediately after the spike is a pullback as the market tries to find its footing before we go back into these heavy swings once again. And we do start this uptrend into these big capitulations. This is where you actually have your giant red candles to the downside, sending us to new lows. This is where recession happens, where we do swing down 30, 40, 50% on larger indexed funds in the stock market. So if we are to pretend it's going to act exactly like 2007 on a time basis, it has so far, right? End of July into August, we see this first move up here on the VIX. We would expect now the market to find its footing. We would expect to pull it down here. And then for the trend to continue, we should start the volatility to start uptrending before an actual breakout. This is where stuff actually goes to zero. Everything collapses, but we might not be quite there yet. And what does this actually look like on the S&P, which the VIX index is based off of? Well, let's go ahead and check that out. So if you remember, we were looking at the end of July into August in 2007. That is right up here when we do start the topping structure before the great financial crisis. And this VIX does start to fly when we do have this first initial drop here on the S&P at the end of July. This candle right here is what that VIX was representing. And then we go ahead, find footing in the market right within here. We have big wicks to the downside, so potentially we do have another big wick to go through, but we do see the market actually rally up take out those shorts, capitulate those bears potentially into bulls once again, make people think that the market is reversing potentially, and this is where your final top does actually come in. This is in October of 2007, right back here after the VIX had settled out before the continuation on this thing into those mass capitulations such as September of 2008 right in here. So could we see a very similar thing, almost identical thing play out where we do see a rally up into election season, which comes in right around October, November timeframe? This is kind of what I'm thinking. It makes a whole lot of sense for this to actually fractal nearly identical to 2008, and I would not be surprised at all to find support somewhere within here. Maybe we have one more big wick to the downside. That's not out of the question. In 2008, we actually take our previous low. So could we take this low before the final top does come in? Potentially. And then from there on, this is where your real recession ensues, potentially a Great Depression 2.0 that I have been warning about on this channel for quite some time based off of these unemployment rates, the Somme roll indicator, the inverted yield curve, and just the overall massive blow off top parabola that we have been creating since 1964. These parabolas don't last forever, and when this does end, I do expect a Great Depression, not just a recession. But could we have one more swing up just to flip everyone back up to being bullish? Because that's normally what happens before recessions. Normally when everyone's calling for a recession, they don't happen. So potentially something like this, make that double top, and then finally roll over. I do think that is likely. That is my base case right now. But because of unemployment data, I don't want you thinking that's a guarantee. There is still the chance the top is already in, and we could just fall into a Great Depression right now. So it's definitely time to stay critical in the markets. We got to be watching these charts very, very closely, but we do have reason to believe off a cycle basis that we could fractal 2007 almost identically and still have that secondary high that actually gets everybody super euphoric once again, potentially into that Fed rate cut, potentially into election season, and that's where your final top does ensue. And with all of that said, of course, what does that mean for Bitcoin? And well, we're looking at this downward sloping channel now because this is something that we are clearly respecting here on the charts. Nice daily close back above this. So we are back inside this channel. We are starting to get back within the range. I like what I see so far when it comes to the price action. We also have this big CME gap up here. If we are to get into the CME gap and fulfill it, we're going to be getting back into this range clearly, and we will have support below us at this point, and we have the potential to squeeze on up to all-time highs. But we need to stay critical here because this is not a guarantee. Me and some of the Crypto Eagles members were looking at this in today's meeting. We do host meetings every Tuesday. If you want to learn what that Crypto Eagle VIP is, check the link in the description down below to read more about it. It's for leverage trading specifically, but we did talk about cycles this morning and how the CME gap actually looked very similar to the one we had in 2021. We made a massive CME gap back here in April, and price went ahead, filled this to the upside before the true capitulations happened. The true bear market really started. So could we see a similar thing here play out on price? I do think it's very likely. The only difference between now and 2021 on a structural basis is that this was a very good high. So there was no reason to go ahead and grab anything up here. There wasn't a ton of liquidity, so this made a lot more sense to actually reject the CME gap, and for that to actually be the top, it was much easier trade to be taken. Whereas right now, we don't have any good highs. These highs are actually horrible. There's a ton of liquidity being built up above each of these. Every time we have made one of these highs, there have been stops being placed above them. There's a lot of stops to be hunted up here, and I do think with all of this liquidity up at all-time highs, it would make the most sense for the market to actually clean that out before we would enter any sort of macro recession, of course, because of economic data, because of what the S&P is doing. If we have a falling knife in macro markets, Bitcoin is probably not going to care about the liquidity. It's probably just going to fall. So this is not a guarantee, but this is why my base case is what it is. I do believe if we can get up to the CME gap, we're going to be above that support, and at that point, we're probably going to flip this mid-channel trend into support as well, because the CME gap is, right around there. So we'd probably come up here, potentially flip this into support. And then at this point, instead of rejecting here like we have previously, I think what we would do is break out and back test this, and we'd go ahead and charge up to all-time highs. but this would not be a bullish breakout as many would believe. You would see a lot of moon boys going crazy. We just broke out of the descending channel. This is fractally where super cycles have happened. Bitcoin's about to go to $200,000, $300,000. And at this point, since we have grabbed the liquidity, all this was just a short squeeze to take out those shorts before the real recession started. Everyone has now flipped bullish, and that is when we see the real crash down into the bear market. But even though this is kind of my base case, we still need to be very cautious. We could easily reject CME. That's also very likely, almost just as likely as squeezing up to all-time highs. And there's even the chance the retracement's over and we could fall from here. I would actually say if we are truly bearish, we probably do just fall from $56,000. If we look over here in trading light, we do see some pretty big whales entering short positions right here. Multiple thousand Bitcoin worth of short limit walls on Binance USDT. But I will say the way price has come up into these walls makes me think they probably are going to get fulfilled, and we probably are going to go a little bit higher because we talked about good highs, bad highs. This is a bad high in my opinion. There was a lot of buying pressure up at this level. This is an unfinished auction, not a failed auction. It's not a finished auction. Price is likely to come back up and test that. But structurally, yes, this single print right here, if we cannot get through it, this could be where the retracement fails. But if it were to fail here momentarily, there's actually the chance we get a sweep of the sweep because we do see more whales looking for something like that. So I think there's always this possibility too that price could come straight back down, wick through, and then fly back up. This would get everyone to panic once again and potentially get absorbed by these whales after cleaning out the lows. So there's actually that possibility as well. Of course, the chart is all just about probabilities and levels and trying to identify what is most likely. It's not trying to predict the future. We have no idea what is going to happen, especially because we are in completely uncharted territory when it does come to Bitcoin and dealing with this economic data that is coming in. Speaking of economic data, we have new unemployment rate data coming in on the 8th. So just in 2 days, it's actually not employment rate data. It is the employment claims. So as you can see here on the 4X calendar, this is huge. We're going to be seeing what the unemployment claims come in as. And I do actually expect this to come in a little bit better than the market's predicting, and for us to start making the case to where unemployment rate would actually go down for next month, which would certainly ease markets, giving us that case for the secondary high on the S&P, where we go ahead and squeeze those shorts to the upside and come down once again. Let's go back to the S&P though, since we're on it, and actually talk about where we are here though. We are seeing some more bear stuff on the shorter term time frames. So we had talked about this CME gap to the upside. We were likely to come up to this no matter what. We have already done that. We have already made this initial retracement. Could this just fall and we never see higher prices than right now? Yes, it is always possible with the recessionary indications that we are seeing across markets right now. Do not think that it is not possible to go ahead and fly down and see massive capitulation candles. We also see the Russell on the shorter term time frames looks kind of bearish as well. We went up here and rejected a value area high, swing failing these previous highs, so this is good. That could potentially roll over. We got to keep our eyes on this. Can we flip this point of control back into support and go up higher, or are we just going to have a falling knife on the Russell as well? We don't really know yet, so we got to stay very vigilant. We got to keep our eyes on these charts like a hawk to see how they are reacting. Like I said before though, there is the chance that the S&P could have that secondary scare. We could fly down there and then wick all the way back up to make that secondary all-time high, and then that's where the true recession starts. If it is going to be like 2007, this could play out, and in that scenario, maybe that's where you do go ahead and make this sweep of a sweep on Bitcoin to fill these long orders that the whales are trying to scoop up. Something like that could play out here in the next couple of days. So if we do get down here, I wouldn't be panic selling at the lows necessarily, but we do need to make sure this is a swing failure and to get back above. If we do start slowly coming down here, not a big capitulation, but slowly trading down, accepting these lows, any acceptance below this, you're pretty much done for. I would expect that is a very, very bad sign, but a swing failure pattern, a big capitulation wick, that's not something to be too concerned about immediately. And I do think there's a good chance that none of this even plays out. I know I'm not selling right now expecting anything like that to play out. I actually do expect for us to kind of squeeze up here. We're holding the value area high of this TPO profile pretty well, and we're starting to squeeze up into these sell walls. These sell walls really only scare me when we get a bunch of shorts to squeeze through them. So if we had a bunch of shorts closing and it was a big capitulation wick through sell walls and we rejected the single prints and made a swing failure, that would be pretty scary. But what we see is buying pressure slowly trading up here, absorbing those sell walls, meaning that this is actually bullish momentum. And unless this is a big market maker that's going to start adding on even more 1,000 Bitcoin to his order, we probably would go ahead and actually squeeze this guy, and we could have that bullish continuation to the upside up to that CME gap. And then this CME gap is, of course, the big level to watch, because as we talked about in our previous cycles, we have seen large CME gaps at the top of our ranges, just like in 2021. If it is going to act similar to this is something we could be watching out for to actually take place. So either this is about to happen or this is about to happen, where we actually flip that CME into support, start flipping everything into support, and then fake out the whole market after grabbing all of that upside liquidity that we can't see on the charts. Right over here on CoinEgg, you see this liquidity I'm talking about up there at the highs. And what's nice is we actually grabbed all the liquidity from the lows already with this big capitulation wick. You can see the $50,000 liquidity has been grabbed nicely. Sweep of the sweep is possible. Anything lower than a sweep of the sweep, that's bearish because there's nothing below that. So we'll watch this carefully. We've got to make sure that 47K can hold. And then assuming it does, yeah, it looks like our next target could potentially be all-time highs just on a liquidity basis. But of course, we got to stay vigilant in the markets. Nothing is a guarantee. And if you do have any questions about anything I talked about, make sure to join my Discord. Link is in the description down below. And below that is a VIP Discord specifically to help you guys out with leveraged trading. And below that are my exchange partners that do offer their own individual perks and bonuses with those sign-up links, including a Bing X limited time event going on right now. So make sure to go check that out as well. And with that being said, thank you all so much for watching, and I'll see you all in the next video.